Greetings traders out there in Traderland. My name is Des here at Grok Trade. It is Thursday, June 14th, 2012. Stocks are decisively higher, with the Dow up 155 plus points, up 1.24%, the S&P up over 1%, NASDAQ up 0.6%, and the Russell's up 1.32%. Banks up 1.37%, leading the markets for most of the day. VIX down nearly 11 points. We are just below 22. Gold up 0.4%, silver down 0.7%, and U.S. Or crude oil here up 2%. And we have U.S. dollar down 0.4%. What's interesting is the flip-flop we're starting to see between gold and silver the last couple of days. Trend, Grok graduates are at 0.60. And what's also interesting here is utilities up 0.72%, which is a defensive type play in a defensive type sector. To see that up also is interesting. But here we are taking a look here at the S&P. We had a falling wedge. We had this pop in consolidation. Again, red, white, red, white, red, white. Very, very typical. Building a high base, which is more bullish than is bearish, and we're doing so above the 20-day moving average. Now you'll see these two red lines. If I drop down to a time frame to the 60-minute chart, I want you to see the swing high to this swing high to this swing high to this swing high. Then we have this swing low to this swing low. We have a nice bullish pennant off of this leg coming higher. And today we had global central bankers coming out saying that they are making preparations to stave off the potential financial pressures that may follow the Greek elections. So the G20 gang came out and said that they would be making changes if, in fact, Greeks were to leave the Eurozone. And that really popped things up, but there was a pop and dump, and a pump and dump that took place, but right at the end of the day we had another little pop to get back above here. And a lot of uncommitted bears were knocked out of this big pop. And those guys that like to chase jumped into this, and there's a lot of limbo taking place here. Be interesting to see how the markets handle this going in to tomorrow. And furthermore, with that rumor coming out, I wonder if that will deflate the actual momentum that we might have normally received on a bailout news or a QE3 type news event. If I go over here to the weekly chart, on the week, higher high, higher low, but we're still staying below the 11 EMA moving average and also the 8 EMA weekly moving average. We really need to get quite a bit more bullish than that to stay, to keep going up in this direction. On the monthly chart, we have a nice little hammer taking place, but we're in the middle of the month. It's only June 14th. But this area is so crucial. The 12.99, we're watching that like a hawk. So let's not forget about that. Let's take a look at Facebook, see where we're at with Facebook. Let's get to the daily chart. And that's a 60-minute chart. Last end of the day, not too bad. But what's interesting here, we had this falling wedge. We have this bear pullback. If I were to drop a Fibonacci here, I'd be very careful going long on Facebook, because we're not even at the 25% yet. What's interesting, let me go just to this swing. Yeah, what's interesting, if I were to take this just to this swing, we had this little pop-up swing, come down, and we're just now knocking at the door at 38.2% Fibonacci. So Facebook is setting up to be a great short right now. Let's take a look at volume, see what's happening. Yeah, on that pop, volume is minuscule and just drying up on that pop. So while we're here, let's also take a gander at Apple for the day. Apple for the day had this rising wedge. We're on the wrong side of it. But this is a little bull pullback. So this bull pullback, we could get a pop, but I have a lot of resistance up here if we were to get that pop. And let's take a look at gold for you gold bugs. What a choppy mess of a chart. Man, what up? I mean, this is just brutal. Down, we get a double bottom, we pop up, higher swing low, but we're finding resistance coming across right there. Big resistance area. Yeah, right there. And you have a hanging man type formation on the daily, but tomorrow we'll round out the week. We'll see if it still gives us this formation. It looks like it may. But if we go to the weekly chart, we're just on the wrong side of this major trend line coming higher. So that's it. Be careful out there in this market. This is choppy. This is a choppy mess that we're seeing out here. And you know what? I'm going to take a look at the banks while we're here. The banks, support. Banks are still finding a lot of support at this line, but we're getting pinched between the 20-day moving average, the 50-day moving average. It needs to stay above that. I think if we were to get below 1693, I would say even if we were to get below 1670, that would be the mark to be really cautious of the markets as a whole. And now this is on a weekly chart. If I said daily, I didn't mean to. On the daily chart, we have resistance, support, resistance. What's really cool here, we just popped our head up over a resistance level on the daily. So as far as the daily is concerned, we have some room to run. I think that we'll have resistance at 1723, so be watching that. If we do get a nice little pop here, you could get a run, so let's be watching that fairly closely. As usual, always appreciate you clicking like there on Facebook, and furthermore, if you leave a comment, I read them all. Love getting comments and questions and just your thoughts of what you see taking place out there in the economy and what you see as far as trades are concerned here in equities. So there you have it. Talk to you tomorrow.